This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July the 5th, 2013. Our time is 8:40 in the morning, Mountain. Our radio show is on your favorite radio station as well. The shows are archived on Harold's websites, HESradio.com and RareColoredDiamonds.com. You can stream them there. We have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. You can listen to Harold's daily market commentary and past radio shows. The show is portable. It goes anywhere you do with your iPhone, iPad, and your iPod. As we tape today's show, unemployment numbers out of the United States. They gained 195,000 jobs, but the unemployment rate stayed at 7.6%. Part-time jobs surged to an all-time high. Full-time plunged by 240,000. And to give you an idea, Zero Hedge had this story. They say in June, the household survey reported that part-time jobs soared by 360,000 to 28,059,000, an all-time record. Full-time jobs down 240,000. And looking back at the entire year, so far in 2013, just 130,000 full-time jobs have been added, offset by a whopping 557,000 part-time jobs. And he talks about Zero Hedge, quality and quantity. And here we are seeing a little euphoria in the markets as a result of this number. But Harold, if you take a look deeper, let's face it, no one wants a part-time job. They want a full-time job, and a part-time job just is not getting it done. It was interesting, the Obama administration, they had, with Obamacare, a mandate that if you had a business, you had to have your employees signed up to health care, and this was a real job killer. They came out, they have delayed that now until 2015. A lot of people saying they're doing it because election's coming up in November. And they're trying to spin it, saying, well, you know, it's not coming together the way we wanted. It's hurting the economy, so we'll delay it. You can see some of the smoke and mirrors behind the scenes, but part-time jobs, Harold, just do not cut it.
No, and that's how they play with the numbers, Randy, to make things look better than what they really are. And, again, nobody can really realize where the jobs were coming from. So the fact is that they always play with the numbers, and there's no doubt in my mind that the employment number is going to continue to fall because the stimulus that's going on, you know, this $85 billion a month that's being put back into the market is supposed to stimulate the economy. It's supposed to stimulate the economy, make businesses do better so they can hire more people. That just isn't working. So all of the money that's being put back into the bond and stock markets all the way since 2008 when this debacle first started has really not done any good whatsoever. And when you look at the trillions and trillions and trillions of dollars that's been put back into the system and is not working is very scary. Where are they going from there? You know, the fact is that there's 3 or 4 major banks right now that are on the verge of massive problems again, just like 2008. So if these banks start to fail, and let's face it, the banks have not done well. Nobody's really borrowing. The fact is that the builders that are building homes here in the United States where they're starting to see some growth, they're writing their own paper. It's not like the banks or the mortgage companies are actually writing business. It's the builders themselves that are sitting on a lot of cash that decided the only way that they're going to be able to sell homes is to write the paper themselves because too many people lost their homes before and their credit ratings are way down. So believe me, the situation in the United States right now is dire. It's not good. The economy is not improving. But you have a divided front. You've got, you know, X amount of people that are saying, you know, the stock market's back and the economy's coming back. And then you have the gold bulls and everybody who feel, you know, that it's the exact opposite. I've been in the investment business over 35 years, and I'll tell you what I see happening is quite concerning. I just don't see anywhere near the economic recovery that they're saying is happening here in the United States. So the market is going to remain very volatile. In actual fact, the market opened up higher today. The Dow opened up higher, but once the job numbers came out, the market started to go lower, and at this point, the Dow is down. Just actually went negative about 3 or 4 points. But on a typical Friday, and this is a very slow week because on Monday you had Canada's Day, and then Thursday in the United States you had 4th of July. Friday is basically a non-event. Nobody's even there trading. So you had really 1 or 2 days during the week where the markets could have traded. Gold did well during the week, so did silver, until Friday. There's no traders around, so they bring the market down, and as we're taping the show, gold's down $39. It really sickens me to see this, but gold's down $39 at $12.14. Silver's down 95 cents at $18.87, and platinum is down $29 at $13.21. Palladium down $12 at $6.77. The Dow just went negative at 241. Trading at 14,986. Got the NASDAQ up 4 points at 3,448. The TSX, Toronto Stock Exchange, just went heavily negative, down 86 points at 12,080. One of the culprits is the U.S. dollar. The U.S. dollar is up 60 cents. It's moved up 4 cents in the past couple weeks and is trading at 84.35. And the market that's really been on a tear has been crude oil. Crude oil's up another 67 cents. We've broken above $100 in crude, and we're now trading at 102. So crude is doing extremely well. There's some major problems in Egypt right now, and that's a focal point in the Middle East as far as they're continuing with their problems there. But all in all, what you've really got happening in the market right now are people that are totally confused. You've got something that we say and others say is impossible, but it's happening in front of our eyes, so obviously it's not impossible. What I'm referring to is the paper price of gold and silver falling substantially while there's very little physical supply. So when I say it's an impossibility, in the true sense of economics, in fact, Economics 101 will dictate the fact that when there's a huge demand for a commodity and the supplies are low, the prices always go higher. And that's always been the case throughout history in commodities. So basically, you have a shortage of physical gold and silver. The dealers are saying that they're waiting sometimes months in order to get any type of physical gold and silver. And when they do get it in, because they're getting so little of it, the spread between the bid and the ask, the price of buying and selling, has increased tremendously. So here you've got this phenomenon going on. You've got very little physical gold and silver. So many people are looking to buy it. There's hardly any available, and those that are waiting are willing to pay extremely high premiums to get it, but the price in the futures market continues to fall. So that's why we're saying that what's happening in the market, I hate to say it's like an aberration because it affects us, because on paper we're losing money depending on what price you bought it at. But the bottom line is that this market is so sensitive, and what we've always looked at, especially over the last couple of years, is the short positions in the market. How many speculators are shorting the market, meaning that they're betting that the market's going to go down. And at this particular point, the amount of short positions in the market is the lowest that I've ever seen. Means that there's hardly anybody short the market. So how is the market dropping? If the banks have reversed position and gone long, this market should be going up. And if the banks have reversed position to go long, they feel that the downside is gone, and that's why they're buying the market to go back up. What I feel is happening at this point is people are just very concerned about the ETF market, the exchange-traded fund market, and that's the only area that the selling could be coming from because, on the commitment of traders report, it's not showing any shorts in the market. So the only thing that could be happening at this point is that the gold and silver ETFs are selling off because they're now feeling that the move in the market is over, and they're liquidating their position. What's going to happen is that the banks and several countries are starting to buy up this excess gold and silver. So what's going to happen? This is not your typical normal market anymore. It's not the market that we have enjoyed for the last 12 or 13 years, where we've seen, a steady upward movement where the market's been up, basically 12 years out of 13 now. So what we think is going to happen is we're going to start to see within the very near future, we're going to start to see major gaps happening in the market. We're going to see some hedge funds come back into the market. We're going to see speculators come back into the market, and the physical market is going to be on fire. We're going to wake up one morning and find out that gold is up $200. We're going to wake up one morning and find out that silver's up $4 or $5. So make certain at these levels, I mean, how much lower can this market go? If silver goes $1 or $2 lower, it's not going to kill anybody. If gold goes another $50 or $100 lower, it's not going to kill anybody. But to be out of the market certainly could cause a major problem, because once this market does start to run, it's going to be like a freight train, and then people are going to start to jump into the market and start to force it higher. The smart thing at this point here, if you're satisfied with silver, which at one time in 2011 was at $50 and is now trading at $18.90. How in the world can we not be excited about silver when the fundamentals for buying this market have not changed? The other thing that we have to really be concerned about is the derivatives market. The derivatives market is what caused Lehman to go out of business in 2008 and the markets to plummet. They're in the quadrillions of dollars, these derivatives markets, and just a very, very slight change in the market could make these banks go under. There's several banks at this point that are on the verge of going under again. So, again, nothing has really changed. All the government and the Federal Reserve was able to do is put trillions of dollars back into the market and found out it didn't have the desired result. We're still in huge trouble here in the United States. I would be an owner of physical gold, silver, and diamonds at this point, the three most important investments that you could own at this particular time.
Connect with Worldwide Precious Metals. That's the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Let them educate you as to why you should have an allocation of precious metals in your portfolio as an insurance policy at all times. We've seen gold go up 12 years in a row. We're seeing it pull back. If you want to be educated why we believe that the best is still yet to come, speak with Worldwide. Their telephone number, 1-866-623-2002. Their website, wwpmc.com. wwpmc.com, telephone number 1-866-623-2002, and get our free weekly newsletter. It is a must-read. It's the companion to our radio show. Get it from Worldwide. They'll send it out to you free of charge via email every week. Harold was talking about derivatives, and it's interesting. We have a quote, and you can read a full story from Eric Sprott of Sprott Asset Management. He says, when you have a notional $1 quadrillion of derivatives, and they change by 1% on $1 quadrillion, that's $10 trillion right there. It's just incredible. It could wipe out the entire banking system. It's a zero-sum game, except the guy who's losing can't pay. Then, of course, the whole system, comes crashing down because everyone worries about counterparties. And that's the concern about the derivatives market. Speak with Worldwide. Let them educate you as to why you should have an insurance policy in your portfolio as a result of the derivative market. Ted Butler was quoted this week as saying, and this is in regard to Goldman Sachs, JP Morgan coming out and saying that, now's the time to sell gold, now is the time to sell commodities, and now they have reversed course. And he says this is the ultimate racket. They rig prices lower, force everyone to sell, so they can buy, and when they're done, they issue a buy signal. The mafia couldn't come up with anything better. Ted Butler, one of the top people when it comes to the silver market. Doug Casey of Casey Research said this week, you don't make money buying when you're optimistic. You have to actually run completely counter to your own emotional psychology. And obviously we're seeing that in the financial markets with hard assets right now. We've all seen the television show Pawn Stars, and there was a story this week about Rick Harrison, who obviously is the head of Pawn Stars, along with his dad and his son, Corey and Chum Lee. The quote is, I retail gold and silver, and I'm having a real difficult time right now getting physical metal. It's the craziest world about gold and silver. Sometimes the paper market is going down, but you can't find actual physical items. And that's from Rick Harrison, proprietor of the world-famous gold and silver pawn shop and star of the History Channel's Pawn Stars out of Las Vegas. Rick Rule from Sprott Asset Management said this week, past is often prologue. For example, In the period from 70 to 75, gold advanced sixfold and suddenly over 9 months went from 200 to 100. Investors who didn't have the courage to survive a 50% cyclical decline in a secular bull market missed the move in gold from 100 to 850, an 8-fold move over 6 short years. And that is a very instructive lesson to keep in mind. He also added, he was talking with Eric Sprott, and he was talking on the phone with Eric, and what he reinforced to me is that he built Sprott Asset Management from a $10 million manager to a $10 billion manager by the aggressive deployment of capital at times like these. Eric has always said, don't be afraid to be right. That's where we are right now. This is the time when the A players go to war. And Harold, irregardless of what you think about hard assets right now, everyone should have a portfolio that includes gold, silver at all times, as it's an insurance policy against, obviously, blow-ups in the financial market and geopolitical trouble.
You're 100% right, Randy. Again, it's just an unbelievable time, and the derivatives market is one of the most frightening markets you could ever look at. And again, I brought this analogy forward, over the past couple months. This is a very similar market condition to 1976 when the markets did similar, scared everybody out of the market, and then the markets ran up 5 to 6 times, and it happened over a very, very short period of time. So we feel a very similar type of situation is present in the market at this point, and we could just wake up any morning and find out that this gold market is up $200-300, and I would bet that that is going to happen. There's no way in the world that gold and silver are going to stay down. This phenomenon of no physical metal available but prices dropping cannot continue, and again, I just believe it's the tail end of these ETFs getting out of the market, and I truly believe that there's several of these ETFs that are liquidating because they didn't have the physical metal to back the positions in the first place. So there's just a lot of skullduggery going on. The governments are desperate at this point, and desperate times brings on desperate measures, and you couldn't be any more desperate than the U.S. and European governments are at this particular time.
Worldwide Precious Metals, it is a company that has access to precious metals worldwide. If you are looking for physical metal, would like to take physical possession of metal, speak with them. They have connections worldwide. www.pmc.com is their website. The telephone number 1-866-623-2002. Get our free weekly newsletter from them via email every week. And as well, let them educate you right now as to why you should be taking a serious hard look at hard assets, gold, silver, platinum, palladium in your portfolio today. Peter Schiff, well-known advocate for hard assets, said, unfortunately, just like 1976, a true economic recovery is not just around the corner. More likely, we are in the eye of an economic storm that will blow much harder than the stagflation winds of the Jimmy Carter years. And once again, the establishment is using the decline in the price of gold to validate its misguided policies and discredit its critics. But none of the problems that led me and other modern-day gold bugs to buy gold 10 years ago have been solved. In fact, monetary and fiscal policy has actually made them much worse. The sad truth is that as bad as things were back in 1976, they are much worse now. Whether as a nation we will be able to rise to the occasion and actually finish the job that Ronald Reagan and Paul Volcker started remains to be seen. But I am confident that the price of gold will rise much higher, and that in its final ascent, we will be that much more spectacular the longer we continue our current policy path. Don't believe the mainstream. Just as before, they will likely be wrong again. One of the stories we have in our newsletter, and it's in the gold section of our newsletter, and we have some great charts there this week, but I think it's important to note Andrew Maguire. Now, Andrew Maguire is a trader of physical precious metals, and he's out of London. It was interesting to note that he says there's absolutely no physical gold for sale. Absolutely no physical gold has turned up. So when you estimate that we've had 600 tons of ETF capitulation, and when you see the fact that we've been obviously had forced producer sales, none of this appears on the market. Why? Because the bullion banks are repaying their positions. We are seeing backlogs and huge delays. This morning we saw a stunning $50 wholesale premium in Shanghai. Of course, we're seeing massive premiums, backlogs, and delivery delays. And if you want physical metal, you're going to pay a physical price, not the paper price, if you want size. And that's one of the other stories, Harold, that we have in our newsletter, that on the silver side of things, they're actually seeing premiums of $10, $15, and $20 in some markets as a result of tightness in physical silver. And Andrew McGuire goes on to say that, in fact, a massive 580 tons of gold was purchased in the last 7 days. He believes it's Eastern central banks purchasing 25% of the world's annual gold mine production in just 7 trading days. Obviously, that is probably one of the largest purchases in the history of gold, and that's all in the span of 7 days. And one of the reasons that some of the sell-off has been taking place in gold, according to some experts, and James Turk has an extensive article that's a must-read in our newsletter. He believes that central banks in Europe are secretly selling gold. They're masking it through their accounting that they do, obviously, their secret accounting. They're masking it, and they're secretly selling it to prop up banks, raise money and prop up banks. And, Harold, it wouldn't surprise me in the slightest if that's the case.
It wouldn't surprise me either. You know, the funny thing is that, you know, when these banks are selling or buying gold, I mean, it's exactly the same thing. It really shouldn't even affect the market, because if you're selling, I mean, it could force the price down. But if it's being bought in its totality, the market should remain even. So the countries are buying up every bit of gold that they can get their hands on. China, India, Russia. You don't see the U.S. buying, and you don't see Britain buying at this point here. So, you know, those are the countries that seem to be in the most amount of trouble at this point. So, again, I'm a firm believer in the fact that when there's a demand for a physical product like gold and silver and the supplies are short like they are, the prices are going to go higher. And I don't see any way in the world that that's not going to happen going forward. So I'm still extremely bullish on gold and silver. I haven't sold any of my physical gold and silver. And at these levels, who would have ever thought we would ever have an opportunity to buy silver below $20 again?
Speak with Worldwide Precious Metals. They're a Canadian company in business over 10 years. They're the experts in this very specialized market. Give them a chance to earn your business, educate you as to why you should have an insurance policy like gold and silver in your portfolio at all times. The telephone number 1-866-623-2002, 1-866-623-2002. The website is www.pmc.com, www.pmc.com. It's interesting to note Jim Rickards. He believes gold is destined for $7,000. And he says, although tightening of Fed policy could drive it down $1,000 on the way there, Tom McClelland, editor of the McClelland Market Report newsletter, is also bullish on gold, comparing the technical level of the commodity to the 2009 bottom in the stock market. It's the same emotional play that's going on. People fall out of love with stocks back then. People fall out of love with gold now. We're reaching the climax point equivalent for the March 2009 low for the stock market. It's a hugely bullish condition for gold, and I'm expecting a real large rebound. McClelland's target is between $28 and $4,400 based on his own technical analysis. Although he did not dismiss the $7,000 level, he said that we haven't yet seen a blow-up moment in the gold market yet. That moment, we would see a major gold producer announce that it's curtailing production or going out of business. That'll be the moment that we mark the low in gold. I expect to have one of those announcements at any minute. We're getting down to the production price of gold right now, and they won't continue producing gold at that level for very long. Also, it was interesting to note that Nick Barishev, who is a Toronto Bullion Fund manager, is still making the case for $10,000 an ounce gold. You can read about that in our newsletter. Get our free weekly newsletter From Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. Harold, we have about 1 minute left in our segment. Obviously, for a lot of people, these are confusing times. That's why we have the radio show, and that's why Worldwide Precious Metals are there. They're the experts. They will talk you through exactly why you need to have an allocation of precious metals at all times in your portfolio.
You bet. Again, it's an interesting time. It's a stressful time from time to time, and I know I get not emotional about it, but I get upset knowing that what's happening in the market is not normal. And the thing that really surprises me is that the Commodity Futures Trading Commission, the federal government of the United States that polices these markets, must think that this is normal. I mean, how in the world do you sit back there as a regulator and see what's happening with these type of markets and say, gee, that's normal? I've been in business 35 years, and very, very seldom do you ever see an attack on a commodity market like has happened over the last 2 years.
Connect with Worldwide Precious Metals, 1-866-623-2002. Start your own precious metals investment account today. Let them educate you as to why you should. wwpmc.com, 1-866-623-2002. Going to come back and talk about diamonds. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July the 5th, 2013. Our time is 9:08 Mountain Time. Radio show runs on your favorite radio stations. The show's archived on Harold's websites. You can stream them at hesradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. A radio show is portable on your iPhone, your iPad, your iPod. Go to iTunes, type in World Financial Report on Radio. You can take this radio show anywhere. Harold does daily market commentary on his websites. As well, you can find the market commentary right at the podcast location, too. Keep up to date with what's going on daily with Harold's daily market commentary. To invest in precious metals, there's only one company Harold recommends you use. They're the experts in this very specialized field. Precious metals, gold, silver, platinum, palladium, a Canadian company in business for over 10 years. Website wwpmc.com. Telephone number 1-866-623-2002. On the diamond side of things, Harold's website is rarecoloreddiamonds.com, and you can speak personally and privately with Harold about diamonds, 1-800-432-1022. And this week we have a stunning featured diamond. Anytime you have an Argyle pink diamond, it's an amazing sight. But then it gets taken to a whole new level when it's heart-shaped, heart-cut. This week's diamond is a .30 carat, heart-cut, fancy, vivid, purplish pink Argyle. And Harold, this is an absolute stunner. You can go to the website rarecoloreddiamonds.com, click on Featured Diamond of the Week. You can see it in our newsletter, but it is an amazing, amazing diamond.
You better believe it. All you have to do is look at the video on that diamond to understand how beautiful and rare it really is. And the color is the best that you can possibly get. Vivid is the highest color grade that the Gemological Institute of America will give to a colored diamond. So the rarity of the pink diamond in itself is amazing. But when you get to the level of owning a Vivid, these diamonds go up more than almost any other diamond. They double in price pretty well every 2 years because the mine that produces them is getting ready to close down. So there's only maybe 5-6 years left on this mine. But meanwhile, very little production is coming out of the mine, and the prices are going higher and higher. So anytime you buy the very best, you always get the most back for it, and that is certainly true in the diamond market. And to look at that featured diamond, it's a 30 points, which is a very nice sized diamond, but the color is vivid. It's just extreme. You can just tell by the video. And again, these diamonds are doubling every 2 years now. In fact, we have clients 5 years ago that bought vivid pink Argyles for $50,000, and now those diamonds are in the $200,000 to $250,000 range. By the time this is over the next 10 years, a diamond like a vivid pink Argyle, like the featured diamond, for example, that could go up 10 times what the prices are today. So you definitely want to get into the diamond market with the state of the world economy, with the banking system looking very suspect again and very frightening, these are the best assets that you could own physically because, again, they don't trade on exchanges, so you don't get the volatility that you get in the commodities and stock markets. The other thing is that they never decline in value. There's so few of them that, again, on a supply and demand basis, the demand for these diamonds is tremendously high worldwide, but the supplies are minuscule. They're very, very low. So these diamonds, again, even on a normal basis, if the diamond goes up by 15 or 20% a year, that will outperform any other asset that you have at this time. Because all you have to do is look at what's happening with your stocks or with any other investments, and mostly putting your money in the bank. For those that are very conservative, you put your money in the bank, you're getting 1 or 2% return. You buy certain diamonds, and those diamonds can go up by 15, 20, 25% a year or more. So, and they don't decline in value. And in the case of the Argyle mine, when this mine closes, these diamonds can increase 10 times what the prices are now. So I very, very highly recommend for those that have the wherewithal to do so, to get into the rare diamond market in combination with other assets. The one thing about the diamond market is that it's portable private wealth, meaning that if the banks go under or the economy gets so bad in North America and you had to relocate, go to Europe, go to wherever, this is one of the only assets in the world that you can do that with. You can't cross a border with more than $10,000 in cash or gold on you. However, a diamond, if you own it, all you have to do is declare that you're carrying that diamond, and you can go anywhere with it and start all over again. So it's always been that type of asset. It's extremely rare and never more important than it is at this particular point. Again, any other investments at this time, anything that pays you more than what the bank is paying you in interest, there's risk to it, except in the diamond market. Because again, the rare colored diamond market, there's very few diamonds available. Only one diamond in 100,000 is colored, and very, very few of them turn out to be the quality of the diamonds that we offer to our clients. So again, one of the biggest profit potential of any investment today is in Argyle pink diamonds, the fancy light pinks, the fancy pinks, the fancy intense pinks, the fancy deep pinks, and the best of all, which are the fancy vivid pinks. These diamonds are becoming more and more expensive because there's so few of them available. However, if you look on our website, on rarecoloreddiamonds.com, we have more vivid pink diamonds than anybody in the world does, and we're about to add 10 or 12 new ones that we just cut. So again, we certainly put our money into this marketplace, and we do it so our clients will have the ability to make a ton of money in the rare colored diamond market. Again, you can get involved in pink diamonds starting at about $20,000-$25,000 and going up from there. And all of these Argyle pink diamonds over the next 10 years will give you the returns that you need in order to hopefully one day retire, with some comfort. Because all you have to do is look at what's happened with your retirement savings plan over the last 10 or 12 years to realize that you're not going to make money putting your money back into the stock market. It'll go up for a while, and then it's going to crash again like it did in 1999, in 2008, and again in 2013. We're getting very risky here. So again, don't keep your money in the paper asset markets, because you're going to wake up one day like we did in 2008 and find out that these derivatives markets are in trouble, and next thing you know, all the banks are in trouble and folding again. So you need to own an asset that is portable private wealth, that nobody knows that you own. It could basically save your financial life. The other diamonds that we recommend are yellow flawless diamonds. They have to be flawless, and these are beautiful diamonds. We've got the fancy lights, which are the canary diamonds. We have the fancy yellows, fancy intense yellows, and fancy vivid yellows. Again, the fancy vivids being the highest color and the ones that go up the most. With the fancy vivid yellows, there's hardly any of them available. They're becoming extremely difficult to get. Because the area in the mantle where these diamonds are found of that very deep, strong color just really don't exist anymore. And that's why the price of these diamonds are increasing so substantially in value. Again, I have to say that when you buy the very best, you always get the most back for it. So when you look at our selection of fancy, vivid yellow, internally flawless diamonds, again, we've invested in them very heavily for our clients and for ourselves, and we have more fancy, vivid yellow, flawless diamonds than anybody in the world has. And the reason for that is that it's our business. That's what we do. We offer diamonds for investment purposes, and then we resell them for our clients. So we've got the Argyle pinks, which are tremendous. We've got these amazing yellow flawless diamonds, and all you have to do is go to the website, rarecoloreddiamonds.com, and look at the videos of these diamonds to understand how magnificent that they are. So you've got those diamonds. They start at $15,000 and go up from there. By the way, yellow flawless diamonds over 5 carats, they can take on a life of their own. These diamonds are selling for absolute fortunes at auction. In fact, almost every auction over the last 2 years has found that yellow diamonds have been giving returns that absolutely defy description, sometimes way more than what the experts at Christie's and Sotheby's are saying that they would sell for. The other diamonds that we love are the deep flawless whites. This is something that most people don't even know exists, but they represent 0.001% of the entire diamond market. They're the best white diamonds that you could ever buy, and the diamonds that we cut are perfect. They're triple excellent diamonds, means excellent in cut, symmetry, and polish, and those are the most difficult white diamonds to get. They increase by 15% a year. So again, 15% a year to own a white, deep flawless diamond and get 15% a year, you're going to find the type of returns that you need over the next 10 years to be able to retire comfortably one day. Now, these diamonds are not inexpensive. In fact, they're sometimes 7 to 10 times what a normal white diamond would be worth. But a normal white diamond is not an investment diamond. A deep flawless white is, and they go up tremendously in value. And one other benefit with them is that they're negative correlated to the stock market. In 2008, when the Dow dropped by 50%, these diamonds went up by 50%. So you couldn't ask for a better hedge against the stock market and a depreciating currency. And the other exciting thing about the diamond market, I've been in the investment business, as I've mentioned many times, just over 35 years. The one thing about the diamond market that always put me off was that how do my clients resell their diamonds? So we built 8 Siegel Fine Auctions, the only company of its kind. It took us 3 years to build it, and it's a phenomenon. The technology is proprietary. We're the only company that has it, and it's a live, real-time auction that you can participate and watch from the comfort of your own home. And it's an amazing thing. It works so beautifully, and we have clients from all over the world that attend our auctions. In fact, we're expanding this business into Hong Kong, into London, England, into Panama and Central America, and into Dubai in the Middle East, in the pursuit of high net worth individuals and stronger currencies than the U.S. and Canadian dollar, which will give our clients even that much more profit. So we're going to have another auction on October the 21st. We're off for the summer because things are slower. But also, I will be on a live television broadcast in New York on July the 19th on Bloomberg. I'm flying up to do a live TV broadcast, and they're interviewing me on the success of my company, and then they're doing a 4 or 5 page article in Bloomberg magazine on my auction business, H. Siegel Fine Auctions, because again, it's the only secondary market ever built to resell smaller diamonds. So I couldn't be more proud. I'm probably going to bring, very, very substantial diamonds with me, and if you get a chance, it'll probably be on our website. You get to see the live interview from Bloomberg coming up later on in July. So again, we're getting a lot of recognition, Randy, because we build the secondary market that clients need to resell their diamonds. And again, we built this for our clients. If you're investing in diamonds with my company, you've got the opportunity to use our auction business, and we only will charge you 10% of the profit only. If you're buying diamonds through other dealers, you hopefully, will make sure that those dealers are able to resell your diamonds. From my experience, that could be an issue for you. So please do your homework before you make a final decision, and please give us an opportunity to earn your business. We've been in the business a long time. We're the leaders in the diamond business, and again, we're the only company that has the auction business that will resell your diamonds for you.
One thing to keep in mind, too, and Harold brought this up on a past show, and I think it's very, very important, the quality of the diamonds, where did they come from? There are different countries that diamonds come from, and some are superior, as is the case with the Argyle mine. Some are inferior, and you may be making an investment in an inferior diamond. Harold is the expert in this area. Speak with him personally and privately before you do anything, and he will make sure that you're getting the highest quality diamond for the best price. RareColoredDiamonds.com is the website. Telephone number to speak with Harold, 1-800-432-1022, 1-800-432-1022. Our featured diamond this week is a .30 carat hard-cut fancy vivid purplish pink argyle. And we have a story in our newsletter that is a must-read. It's about the Argyle mine and their pink tender. The 2013 Argyle Pink Diamond Tender comprises 64 diamonds this year, 58 pink diamonds, 3 fancy red diamonds, and 3 blue diamonds. All 64 diamonds in this year's collection were cut and polished in Western Australia by Rio Tinto's master craftsmen, acknowledged globally for their expertise, precision, and artistic flair. This year's collection comprises 6 hero diamonds selected for their unsurpassed beauty and named to ensure that there basically is a permanent record of their contribution to the history of the world's most important diamonds. You can read that story in our newsletter, but I think, Harold, it's important to reiterate. Think about it. 64 diamonds. We've shown a picture in the past. It's a champagne flute, and it fills up maybe half to 3/4 of the champagne flute. 64 diamonds for the entire planet, 58 pink, 3 fancy red, 3 blues. That is it for 2013. And this will continue on for maybe 5 years. Then the Argyle mine runs out. They have a few years after that where they have some inventory that they've had stored away in their vaults. And then at that point, Harold, the world is depleted of 90 to 95% of the pink diamonds. And at that point, the people holding the pink diamonds ultimately will decide where prices go.
You better believe it. Again, it'll be all supply and demand. So I'm very excited about this. This is my favorite time of year when the Argyle Pink Diamond Tender starts. It's the highlight of the diamond business. And basically what they do is that they take their top 50 to 60 diamonds, all over a half a carat, on tour to 6 cities around the world, and us high-end dealers and jewelers, mostly jewelers, end up buying these. Now, you get to view the diamonds. You get 1 bid per diamond, and it's sealed, and if you know your business, you will end up with some of these diamonds. But there's hundreds and hundreds and hundreds of dealers that will go and view these diamonds, and again, there's only going to be 65 of them sold. It's the highlight of the diamond business every single year, and it's very, very well received. These are some of the most beautiful diamonds ever. Now, I've got my own collection of Argyle Tender diamonds. I've owned them for many, many years. To give you an indication, back in 2003, I bought a 2-carat, just over 2-carat, fancy, vivid, pink Argyle that was a square cut, a radiant cut, and I paid $350,000 for that diamond back then, and now the diamond's worth $3.5 million. So you tell me any other investment over the last 10 years that's gone up 1,000%, and again, especially in an investment that there's no risk to. The only risk that you would have to your diamond is if you misplaced it or lost it. So again, this is one of the best investments you could make. This is probably the last time in history that we will ever get to take advantage of a situation where one particular diamond mine really produces 95% of that particular diamond. This will never, ever happen again. So for those of us that are in the market at this point, congratulations. For those that want to get into the market, now is the time to do so, because again, as you can see by our selection, we have more Argyle Pink Diamonds than any dealer in the world does. I just spent $40 million with Argyle to make sure that my clients have the opportunity to make money in the rare colored diamond market.
Speak with Harold, rarecoloreddiamonds.com. Ask him about the featured diamond, everything on the website. There are videos to go with every diamond. You will see the diamonds 360. Speak personally and privately with Harold at 1-800-432-1022. And Harold has an open invitation for you to speak with him about your financial situation, and he'll be happy to talk to you about it, educate you about the diamond market. And if maybe you're out there and you're thinking about making an investment in a colored diamond from another company and you're unsure of the quality of the diamond, exactly what you're getting, speak with Harold. He is the world leader at rarecoloreddiamonds.com in colored diamonds. He was the first to bring us the website, first to write about it back in 2005, August of 2005. and really everyone else is following him, and he's the first, and no one has come up with, no one's copied him yet on the auction site. But Harold, you are the originator, you're not the follower, and people really should be dealing with you because you have not only the highest quality diamonds at the best investment price, but obviously you have the connections as well to not only sell the diamond, but make sure that people are kept up to date and really know what's happening in this market at all times.
Well, it's extremely important. Information is very, very important in order to make an informed decision. And again, that's what we try to do in order for our clients to learn about the diamond market. Fact is that the diamond market is on fire right now. We have diamonds starting at $15,000, and we have diamonds that sell for over $50 million. We have a yellow flawless diamond coming up for sale soon that is over 100 carats, and it's vivid in color. So, we have white diamonds, deep flawless whites, that are over 100 carats. So we can help you with anything you want, from a smaller pink or a yellow flawless, all the way up to some of the rarest diamonds in the world. And again, these assets are where the wealthy are putting their money. What we've done is we've made this market available to our clients that are not multimillionaires. You do not have to be a multimillionaire to invest in the diamond market. In fact, the majority of my clients that invest in diamonds are just, again, everyday hardworking men and women, mostly, Canadians like Randy and I, that just want to do the right thing. And that's why we created 8 Seagull Fine Auctions, because there's always Christie's and Sotheby's for those of you that have, those mammoth diamonds. But how about the marketplace where you're talking about, half a carat diamonds or carat yellow flawlesses or whatever, and that's the market that we develop. Nowadays, in order for somebody to copy our auction business, it would cost them 7 figures to build an auction site that is credible and works in the fashion that ours does. And again, ours is available for our clients to resell their diamonds. In fact, that's why we built it. So, Randy, there couldn't be a better time to be in the diamond market. The banks are in trouble again. The markets are extremely volatile. There's problems in the Middle East. There's problems all over the place with currency devaluation and all that. And all we want to make certain is that when all the dust settles, we come out ahead. That's why we do what we do.
Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022. We have 2 minutes left in our show here to invest in precious metals. The experts that Harold recommends you use, Worldwide Precious Metals. They've been in business the entire time of this bull run in precious metals. They've gone through all the ups and downs. They're the experts that can help you through this and at the same time educate you as to why you should have an allocation of precious metals in your portfolio at all times, good or bad, and have that insurance policy to cover you off in case of a different event, maybe a geopolitical event, a financial event. The telephone number to connect with Worldwide, 1-866-623-2002, 1-866-623-2002, the website, wwpmc.com. And connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, and take a look at his auction website, hsfineauctions.com. Go through the past auction that was here a couple weeks back, and you can also mark down on your calendar October 21st, 6 Eastern, 8 Mountain Time. We will be having, actually, it's the other way around. It's, what is it, Harold? It's 8 Eastern, right? 8 Eastern.
8 Eastern time is exactly
6 p.m.
correct,
yeah, 8 Eastern and 6 p.m. Mountain Time. We will be having another auction. Harold, we have about 30 seconds left.
Great. Well, again, it was a slow week in the markets. It was Canada's Day on Monday. It's Thursday and Friday was long weekend here in the States. Markets sold off on Friday, but all in all, again, there's a lot of excitement in the market. There's a lot of opportunity, and I think at these levels, we can make an awful lot of money in gold, silver, and diamonds. So again, it's a very good time when the sentiment is negative. That's when I like to jump in and make a lot of money in the markets.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Speak to Harold about our featured diamond of the week, that stunning .30 carat, hard-cut fancy, vivid purplish pink Argyle, rarecoloreddiamonds.com, 1-800-432-1022, and on the precious metal side of things, wwpmc.com. Worldwide Precious Metals, telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.